Alrighty, traders, good morning, good afternoon, good evening, and welcome to the FxBigDog trading channel this morning. And trust everyone is being great. It's been a while. So traders, we're gonna go ahead and take a look and see what's going on with the market this morning. But more importantly, we're gonna take a look and see exactly how we can profit from small market movements in the market, specifically at the start of the New York session. So when the stock market's opened up at 9:30, opportunity presents itself, and we're going to go ahead and take a look and see how it plays out. Now we're going to take a look at a few things this morning. We're going to look at NQ, we're going to look at gold, we're going to look at ETH, which is crypto. We're going to look at some currency pairs, and also going to go ahead and share a little bit about, of course, how we identify market bias, and then, of course, how we break it down into the lower time frames to look for opportunities. So we will be looking at certain currency pairs. Now, traders, you are more than welcome to go ahead and post in the chat what currency pair you would like me to go ahead and break down for you and give you a short and sweet market directional bias, and of course trade opportunity. Now, with that being said, traders, we're going to go ahead and dive into it right now. NQ is going to be the first thing that we're going to go ahead and talk about this morning. And we're going to look for a trading opportunity here on NQ. And I'm going to show you exactly what it is that we do and how we trade the markets. And I'm going to show you the tools we use as well. So a lot of information is going to be passed on to you today. Now, traders, as we go ahead and share the screen right here, make sure that you understand that at any time, all right, no pressure on you guys, but at any time, if you feel that you want to be part of what we do every morning, we look at the markets on a Tuesday, Wednesday, Thursday. We analyze it, we break it down. Traders are making ample profits every single day that we trade. And it's pretty simple. But if you want to be part of that, check out the top left there. You see it says take a ride. That gives you access to everything that we offer. Everything we offer. Take a ride. Have sort of a trial on everything we do. If you like what you see, check it out and join us for the live sessions. Of course, get access to all our tools, all our replicators, everything we do here at Traders Network Club. So with that being said, traders, I know you're all here for one reason and one reason only, and that, of course, is to take a look and see what's going on with the market as we dive into NQ. So let's go ahead and dive into NQ this morning. And here is NQ on the 4 hour. I'm going to go to the 4 hour first. Here we go. And if you take a look at the 4 hour, we did have some news that came out this morning. It was jobs out in the US. Now, granted, traders, we are in a war at the moment right now, and obviously, based on the war with Iran, we are seeing the markets being a little more volatile than usual. And then, of course, we're also seeing that the technicals are still really showing us where price is moving to. So, despite of the news, despite of what's going on, markets are still doing exactly what it should be doing. All right, and there are 4 reasons why price would move. Number one, price loves to hunt for liquidity. Price loves to rebalance equilibrium. Price loves to rebalance insufficiency. And price generates liquidity. All right. So those are the 4 reasons why price moves. Now, if you understand that, then you can simply take that information and use that in order to be able to trade the markets. So you can actually build up a story, build up a trading plan of exactly what the markets are going to do at that point in time. So with that being said, what I'm going to go here is I'm going to go ahead and take a look at the chart. So we had some news coming out right here. You can see that non-farm came out lower than expected, much lower than expected, negative numbers right there. Unemployment rate, that also we saw it rise up 0.1% to 4.4%. So not good numbers out here in the US. So if we go to take a look at the markets right here, then if I go to the US dollar CAD, we can actually see the market reacted a little differently, right? So let me go to the 30-minute time frame right here, and we can see the initial news spiked the market down, but then we saw price moving back up north again. All right, so going back to the 4 hour, we're gonna focus on NQ this morning. So the 4 hour, What I'd like to do on the 4 hour is I'd like to go ahead and break it down here and look for buy side and sell side liquidity. All right, where the market's going to move to, and then we can identify what the draw is going to be. So right here, I'm going to go ahead and mark off high, low down here. I'm going to go with a low right there and a low right here. These are the areas that I'm interested right now. So this will be my external. So I'm going to mark this off as the external buy side right here. Let's go ahead and actually set it external buy side. And this one right here, I'm actually going to go and mark it off as a, let's go ahead and mark it off like this, because it has been, sorry, that's not, that's sell side. I'm going to mark it off as sell side right here. All right, so we had a sell side sweep right here, or at least a run. And then we've got another area here. This is going to be internal, so we're going to mark this off as the internal low. All right, so let me go sell side internal. I don't know if it's low liquidity, but we're going to go ahead and mark it off as internal here. And then this one would be our external sell side right here. All right, and I'm going to mark that off as my external. Is it external sell side? External. There we go. Sorry. All right, good. Now that I've got that marked off right here, I then want to go down to my lower time frame because I want to see what the market's going to do. Now, hold on. I've just seen something here as well. Notice that we have a insufficiency here as well. I want to mark that off. This is on the 4 hour, so I'll mark it off as my my insufficiency here on the 4 hour. Right, there it is. And so why does this become important? Well, it doesn't necessarily mean I want to buy there straight away. It means that this is where I could see the market holding off at a little bit of support. And if the market on the lower time frame confirms that we are holding up at this level, we could see some short-term trades on that. But also if the larger time frame confirms it, if we see the larger time frame respect this level, then we're expecting then price to move back up to internal buy side, which is going to be up here at the top. So we can mark that off as internal buy side right here. So we're going to mark off internal, external. There we go. We got that. So we got some good levels that we can identify where price can move around. And we're going to keep that in play right here. And we're going to see how the market reacts. Now, some of you might be looking at the bigger picture and saying, Big Dog, what does the bigger picture look like for NQ? Well, traders, we can clearly see that the market has found quite a bit of support in this area. All right. So there's quite a bit of support in this area right there. And we can see that there's quite a bit of resistance up at this area here as well. So there's definitely strong levels of support here. And let's see if I've got something I can place in here. Let's say this is, we'll mark it off as support. Yep, let's call it premium zone right here. Just means supply area. And then down here, we'll call it discount here. Discount zone right here. And let's do discount. All right, there we go. All right, so now we got this marked off here. All right, now that gives me a good place to identify where price could also, sort of react at those levels. Now, more importantly now, traders, what we want to see here, based on what we currently have right now, what we'd like to see here is the market react at these levels. So now I'm going to go down to my lower time frame. This is where, we get to identify great opportunities between support and resistance. All right. Now, if I go to my lower time frame here, I'm going to go ahead and pull up, take a look over here. Just FYI, the strategy I'm going to be showing you today, you can see that the success rate has been pretty solid since early January 2025. All right. So for a year and 3 months at the moment right now, so almost 15 months. So for 15 months, we've seen the strategy being pretty confident and pretty profitable. All right. So what I'm showing you here is nothing less than almost perfect when it comes to trading this approach. So now we're moving down to a 2-minute time frame, right? Traders 2-minute time frame. And I'm going to allow my system to go ahead and tell me exactly what it is that I'm going to be able to trade. And it's going to tell me my contract sizes. And by the way, just FYI, a lot of traders believe that, it's just like, Big Dog, it's really difficult for me to trade futures because I don't really know anything about futures, right? A lot of people say, Big Dog, I don't understand futures, it's too difficult. Well, if you can click a buy button, if you click a sell button, this can work for you. All right. And I can assure you, this is as simple as I've taken people that are in their 70s, spent 5 minutes with them, set them up with everything that they need, and in 5 minutes taught them exactly how to trade futures by simply saying, if you get a buy signal, on the indicator, click the buy button. If you get a sell signal on the indicator, click the sell. And I've even gone a step further. I said, hey, join me in my live sessions, and when the market sets up with an opportunity, I'm going to walk you through this, and I'm going to tell you in upfront, hey, get ready to buy, get ready to sell. All right. And that's pretty much what it boils down to. So we've got about 3 minutes left before the markets open up. And what I'm looking for right here is I'm looking for the market to create an opportunity, create a pattern at the bottom over here. And it could be, of course, based on this. Remember, we marked this off as a 4-hour fair value gap. All right. So we've got insufficiency right here. So what is if we add insufficiency, right? If we go back to the 4-hour time frame right here, if the market's trading at insufficiency here, then either price is going to try to work its way back down to sell side right here, or if we get a U-turn here, price is going to work up to its buy side. Now, we can also get this case scenario where price is going to try to work its way back up towards maybe resistance, and then retest this candle's bearish movement, and then drop back down south here. So there is a possibility that price may not make it all the way up here to buy side before it takes out sell side. Why? Because the market is always hunting for liquidity, right? And so you have to then identify what the draw is on the day. All right. It could be just the morning. What could be the draw for the morning? All right. And so we go back to the 2-minute time frame. We've got about 2 minutes left on this. All right. We're looking over here. You can see that my indicator has already indicated that we're looking for a buy, a long in the market. All right. We're looking for a long. So the status is basically saying at 9:30, we're going to look for an opportunity, and it's going to give us either a buy signal. It's going to tell us where our entry point is, tell us where our stop is, I take profit. All right. So, and you can see here out of the last 26 trades, we had 22 winners and 4 losses. All right. So the last 26 trades, we had 22 winners, 4 losses. All right. And here is a great example of what happened yesterday. Yesterday, we had a fantastic opportunity yesterday. Yesterday, I closed up with $5,900 in profit. Look at this right here. Here was your entry point. Here was your stop loss. Here was your take profit. Price then turn around, hit back down south. All right. So that was the last trade from yesterday. So if we go back here, we've just opened up. Let's see what the markets are doing. All right. So here we go. All right, so we've got, and by the way, you can see here it's telling us what our range is. Our morning range is 1,111 pips. That's quite a bit. All right, that's quite a bit. That is quite a bit. So let's take a look over here. And let's see here. Now, traders, if you're wondering how you can get involved in trading futures with very little money, of course, we have a futures program. You can get 80% off by using our code FxBigDog. So if you want to go to, we're using Apex at the moment. If you go to Apex, apextrading.com, and you use our code FxBigDog, use FxBigDog, you can get 80% off the funded capital. So you can get funded capital $150,000 and only pay $60 for that funded capital. Okay. And then we'll show you how to pass your evaluation and then, of course, get funded and then start making profit on from that funded account. So it can cost you as little as that. Now, traders, I also want to go ahead and thank our sponsors, take the opportunity to thank our sponsors. DNA Funded, ACAP are our sponsors this morning, and we are going to give away some funded accounts, Forex funded accounts. We'll talk about that a little bit later. All right, how you can get access to that. All right, so the 2 minutes is opened up. You see the market's showing a little bit of liquidity here. Notice that we've got an insufficiency here, how the market tapped into that insufficiency here. So there is a good chance that we're going to want to go ahead and take out this low, all right? So price may want to go ahead and take out that low right here, trade out a little lower, and we might see this as a liquidity sweep here, right? And if I look over here, we can see that price is about 200 ticks away from that level there. Now, traders, there's nothing wrong with trying to scalp the market, right? This is not. This wouldn't be our ATM model. Scalping the market wouldn't be the ATM model. I'll show you what that does when it sets up. But more importantly, if traders find the opportunity to want to scalp the market, if got a sort of like a market bias and they want to trade that market bias, they can certainly do that with ease. But if you're looking for a ATM model setup, the way we teach it, then right now it's telling us that we do not have a trade at the moment right now, right? It's the status says still looking, all right, still looking for an opportunity. Now, again, that doesn't mean that you cannot look to scalp the market. Now, if you look over here to this low, there's 300. All right, now it's got even a little bit more than it's up to 400 ticks inside this move from here to there. In fact, let me go from the bottom here all the way to this Fair Valley gap here, 467 ticks. So traders, I can see how traders would look at this and go, man, this looks like a great opportunity to scalp the market. Absolutely. Okay. Now let's see here. We've got about 17 seconds left. Now I want to show you a scalp here, a real quick scalp here. Now again, this is not part of our ATM model, but if you go ahead and you scalp the market, looking for, and let's change this to ticks right here. All right, change it to ticks. And you're looking at placing, let's say, 100 tick stop, but you're looking to grab maybe 60 ticks on this trade. All right, this is what it'll look like right here. All right, so we've got price rejecting that level. So let's go. I'm going to just go a little further here because it looks like the price is moving. Let's go with 100 ticks here. And go ahead and sell. If I sell here, okay, and I'm looking for a quick profit. You see how the market created this candle wick? See how the market took out this previous high right here? So that becomes a liquidity sweep right here. And when you get a liquidity sweep, we normally expect price to want to go back and take out the sell side right here. All right, so we're going to mark this off as a sell side. Remember, this is a scalp trade. So if we're gaining 1400, we probably want to risk 1400. Put a stop above this area here. All right, so we're looking at moving our stop to a. It didn't move. All right. So there. Okay, so the market's moving down. There it is. Now I'm going to just close out this position here. So here we go. 800, 900, 1,000, 1,100. And I'm going to go ahead and there's 1,000. So now I'm going to close out. Boom, done. Close it. Take your profit on that. All right. Close out on the trade. And you're closing out with a quick, let's see here, a quick profit on that trade. All right. We took about $1,200 on that trade. Let me just go back here. All right. So now again, and just FYI, that's not even the ATM model. That's just a quick scalp in the market. And the reason why we scalp that is because we notice that price respected insufficiency here. And there's a very high likelihood that price is going to come back down to want to sweep the low again. And if it does, then we could find the opportunity going long. Now, remember, the ATM model has not confirmed go long yet. All right. Has not confirmed go long yet. So we're still waiting to see if we're going to get something setting up. See notice how the market taps here at the sell side right here. All right. Maybe it just went through one or two ticks through that. Hasn't taken it up. I do expect it to run through this level right here. And again, traders, if we do get a setup, it'll be a nice little scalp setup right here. Now, while we're waiting for it, keeping in mind that trading isn't about finding a trade every single day, right? It's about finding the opportunity. When the opportunity presents itself, then of course you can take the trade. But if there's no opportunity, if the market's choppy, no opportunity, then simply you go ahead and walk away. Now, the trade we took over here, closed out with $1,200 in profit, was a trade that took place within 2 minutes. So within 2 minutes, we managed to go ahead and get into a trade, close a trade. Now that could be your trade for the day. If you're looking at gaining, let's say, 60 to 100 ticks a day, but just scalping, and that's all you want to do, just do the math, right? If you do the math and you take, and I'm just going to use my calculator here, you take, let's say, 65 ticks a day, times about 5 trading days, times about 4 weeks, that'll be 1,300 ticks per month. Now, if you're trading with, let's say with 20 contracts based on a $150,000 to $300,000 trading account, and remember that is funded capital, then you're looking at, let's take 20 contracts, and it's going to be 50 cents per contract. All right. So you're looking at $10 each tick times about 1,300. You're looking at $13,000 for the month. Traders, that is just chasing after small profits per day. All right, traders, see the indicator. What is it telling us? It says 10 contracts, it says buy. Now we've still got a minute and 5 seconds left. So I'm waiting for this candle close out to confirm. But already it's telling us, all right? And by the way, you see here this alert? This is actually an automation that we've got put in place as well. But you can see here that it's waiting for this candle to close out. We got 46 seconds left before this candle closes out. When this candle closes out, I'm already going to tell my clients, my students, get ready. Let's go ahead and click the buy button right now. And whether you're scalping the market or whether you're chasing after a different level, that's up to you. But to put proper equity management in, it says enter now. It says 7 contracts. All right, so let's go ahead and adjust the 7 contracts. Now it says 8 contracts. So I'm going to do 5 contracts just to be on the safe side, to keep my risk management in good place. There it says buy. I'm going to go ahead and buy right now. All right, now that I'm in, all right, it's been confirmed. We have a buy signal confirmed. Now I'm going to put the stop loss where it's telling me to put the stop loss right here, right? And I'm going to put my take profit all the way up here to where it's telling me to take profit. Now, traders, I could also just be looking to risk a 1 to 2 risk reward ratio, right? I could be looking to say, if I'm risking $700, I'm going to chase after 700. Or I could even go ahead and do this. I can look for the market to move to premium. All right. So here is my premium zone right here, above here. If I don't see price moving above this and staying above this area, I'm probably going to take some early profit. If it trades above this area, we should continue to move to the outside of the range, which is over here. Now, again, traders, not every trade is going to work out. And the reason why I'm saying that is you can see it right about here, right? It tells us here that we are losing 4 out of the 26 trades. So they are going to be losers, and I get it. They are going to be losers. But out of 22 trades, we've been successful over the last 26 trades. In fact, when we looked at the statistics here, we see out of 325 trades over the last year, year and almost 3 months, we've been 56% successful. All right. So, and with a drawdown of 10%. So we're showing a 34% return, and we're looking at, and that's using proper risk management right there as well. Again, not every trade is going to work out the way we expect it to work out. And it all comes down to how you manage your risk. Now, I did close out here and told me I could put in 10 contracts. I only went into 5. So I'm going to wait and see if we can get a break of structure. If we get a break of structure, this is where we can stack into that position. So if we get a break of structure right here, then I might want to go ahead and just add into that position, right? Because now I get getting a bit of confirmation of price moving. Now, what I could also do here, okay, I could also add into this position if price comes back to retest this area. So you see this candle wick right here? If we take out this low, we tap into that insufficiency right there, this would be almost a indication that we've got a sweep before the run. And traders, you've got to love when the best time to enter the market is after a liquidity sweep. If you can get in after the liquidity sweep, this will be a great opportunity for traders to want to go ahead and enter the market. So look for that liquidity sweep. If you get the liquidity sweep, it's a great place to start entering the market. All right, let's take a look and see what else is going on. All right, so it's tapping. All right, so it's moving around here. All right, there it is, starting to push. Again, if I want to add to this position, I want to see expansion move through that high. We've got about 43 seconds left on this candle. All right, there we go. We're getting some push right here. And what I don't want to see is price pushing up and coming back down, closing the back up about here. All right, we've got about 23 seconds left. And remember, we got in on the close of this previous candle right here. So we've been in this trade now for 2 minutes, and now going on to 4 minutes on this one. The previous trade that we scalped was in and out. We were in and out of that trade within 2 minutes. All right, so there's your pullback. You can see how the market's respecting this level right here. Okay. I'm going to go ahead and add in another position because I think that's just a retracement move. So let's wait until it pulls back a little bit here. Actually, you know what? Let's wait for that. Let's see if we get a sweep here. Let's see if we get that sweep. Let's see price sweeps below, rebalance insufficiency, and then takes off and goes north. And if it takes off and goes north, we have already a trade here that we've placed already. And if it doesn't work out and the market goes down and it becomes a reversal here, then it is what it is. You know, we'll look for the next opportunity. Now, as long as your risk reward ratios are good, traders, you're always going to be in good shape, right? Now, if you look over here, my buy trade here, this is where we bought in, all right? This is where we're looking to take profit, right up here. And this is where our stop placement is right there, right? So if you look at that, what is our risk reward ratio? Our risk reward ratio on this is that we are risking 1 to 2 point, almost 3. So 1 to 2. So we can lose 3 times, or at least we can lose twice and win once and still be profitable. All right. If we lose 3 times and win once, we're going to be break even. So we know we got 3 times that we can lose, and then so if we place 4 trades, we lose 3 times, we win, we're still going to be okay. That's why risk management is critical. Now, I don't see my stop here. Let me put that stop here again. For some reason, it disappeared on me. So I'm risking 700 $100 for $2,100 here. Of course, this is the initial risk. Oh, notice the sweep here, traders. Now we're going to go ahead and buy. All right, putting in another 5 contracts right here. The reason why we enter another 5 contracts, remember I said to you, if we get a sweep of the low, all right, sweep of that low, we're going to go enter again. And now we're going to look for the break of the structure, right? So we build into our position. And it's also, it's still inside our risk management rules, because remember right here, it said that we are going to, we should be entering with 10 contracts. We started off with 5 initially, and then we looked to see if the market was going to sweep, which we got. Let's retest that liquidity sweep. And then we re-entered the market based on that liquidity sweep. We re-entered the market again with the next 5 contracts. And now if I want to be a lot more aggressive, then once we get a break of structure, I can go ahead and add into the position, because we're going to probably get a run through this and a run towards the high. Again, if it doesn't work out, I just look for the next opportunity. All right. Making sure that my risk management is going to be applied all the time. Now, remember, what did we make on our first scalp? On our first scalp, we closed out with close to $300, right? So if I'm $100 right now on this trade, that means if it didn't work out and I scalped and I made myself 1,300, I'm close to break even for the day. That means I haven't really lost or gained anything, but I've got. All right, so it looks like we had another sweep here, and it came back down this area here. Now we've got insufficiency showing that the market respecting it. We've got about, let's see here. We got, let's see. We got there we go. It closed out. So with 2 minutes closed out. So I should be expecting a nice little run on this one. Let's go take a look over here. Good morning, Henny. Good morning, Henny. Kathy, good morning. All right, Kathy. Kathy, go ahead and send me an email. Send it at support@tradersnetworkclub.com. Send me a support at tradersnetworkclub.com, and I'm going to reach out to you this morning still. All right. Go ahead and send me an email at support@tradersnetworkclub. And traders, if you at any time want to get involved, take a look at the top left there. You see a QR code, says take a ride. That'll give you access to everything we're talking about today. You'll get access to the indicator. You get access to the live trading sessions. We'll help you. We'll do it. Every client will be onboarded. All right. We have a one-on-one onboarding with every client. And in that onboarding, we will get you set up with everything. We'll tell you exactly where to go, what to do, how to open up a funded account, which companies go with, the discount codes, use our discount codes to get your discount. We'll be working through that whole process with you. All right. Now, traders, I'm going to let this one ride a little bit. Let's see here. What are we at? All right. So we're at break even right now. We've got about 14 seconds left. I'd like to see a nice bullish candle move north here, just to give us a little bit of a pump, because it is accumulating a little bit here. And I'd like to see some more volume coming in. We might get some volume coming in around about 10, but I'm expecting here's the 950 macro. So hopefully now at the 950 macro, we can get a little bit of a pump here. And traders, once we break through this break of structure right here, I've got 2 options here, right? 2 options. The one option here would be that I would move my stop to break even and let it ride. The other option would be I add into my position and I let it ride, all right? But then I tightened up the stop loss a little bit. Now, if you're wondering, Big Dog, is it possible to have this indicator totally automated? And the answer to that is yes. We're actually just about to release the full automation, which means traders, you just have to sit back, relax, and allow the trade to go ahead and self-implement for you. All right. It does that for you. So even if you're not at the computer, it's going to do that for you. There we go. There we get that pump right here. Now, like this right here, I want to see a break of that structure. And traders, I'm already, look here, I'm already getting ready to go ahead and add to this position right here. So we got about, let's see here, we got how much? We got about 29 seconds left. I don't want to see it. You know what? Just this expansion candle right here might just be good enough for me to be able to. And what I'll do is I will tighten up my stop. If I add on here, I will definitely tighten up my stop, because if I add on, then I'm expecting price to take off. And I like this already. Let's just close above there. I would prefer to close above there. Ah, it didn't. All right, so let's see if it comes back to rebalancing sufficiency here. And there it does. I'm going to go ahead and buy again. All right, so I'm going to buy in again. Now I'm going to tighten up my stop now, because now I'm saying, hey, if this thing goes off, or at least if this thing doesn't go off, I still want to risk around about, let's say, $2,000 on this trade. All right, so I'm going to take the candle, and or at least the stop loss, and I'm going to tighten up a little bit here, just below this area here, because if it doesn't go through here, if it turns around, we're probably going to go down further down here. So I don't want to put too much risk on the table here. And now I'm going to see if this thing can just break through. So I'm looking at this as just a rebalancing. And if I'm wrong and it becomes a railway track and price comes all the way back down, you know what? Then I was wrong. All right. Now, traders, we are going to go into some currencies this morning. So just stick around. We're going to definitely review some currencies. And if there's any currencies that you're interested in reviewing, make sure you go ahead and let me know. Type up in the chat which currency pairs you'd like me to go ahead and review and break down. And I'm going to show you one of our systems that we use that's going to simplify your process for you. All right. Well, traders, the fact that we did not break above that area is making this trade less exciting for us. All right. We want to see the market actually displace above that area. Maybe we're going to get it in this candle that's now opened up right now. Let's see. If this candle doesn't take off and break through that high, and traders, once I break through that high, I'm going to move my stop to break even here. And now we just let it ride all the way to the target. All right. And again, you can at any point take profit on your trade, or you can simply go ahead and just ride it out all the way to the target. But let's see if we can break through that break of structure right here. That's going to be key. All right. Now, traders, I'm going to throw you a little hint here. That take a look at ETH right here. All right. Look at the price of ETH. Now, the market's traded right here. If I see ETH trading above, let's say 1980, I'm going to expect this thing to pump above. So now I'm going to watch ETH here, and I'm watching the price of ETH. ETH is trading at 1976. So let's see if it can pump. I want to see it pump above 80. If I see ETH pumping above 80, then I feel a lot more confident holding on to this trade right here. If it doesn't, then it's a good chance that price is probably going to come down and stop me out. So what I'm going to do here, and again, that'll also give me, if I see it's hovering right here at the price, then I might just go and say, let's just give it a little bit of extra room right here on the stop while it's trying to figure itself out here, because it's at that 77. So I'm expecting the pump. Let's give the market a little bit of room here. 78, look at that, 78. 79, it's pumping. Traders, I'm expecting to see, gave it a little bit of room here. Let's see if the market's 78, come on. And if the market breaks the structure, then this area becomes the support area. There we go. 1980. It was at 1980. Traders, I'm surprised we haven't seen a pump yet. Let me see, make sure my stop's at the right place. I want to put it behind that fair value gap there. Yeah, I want to put it behind the fair value gap here. We've got a fair value gap that's holding over here. All right, this sweep doesn't become important anymore. I can take this out. Let's take this out here. Let's clean up the charts a little bit. All right, let's see here. I'm going to zoom in a little bit closer up so you can get a good look at what the candles look like. So the fair value gap is still holding here. And I'm looking at ETH at 78. I'm surprised we haven't seen the pump yet. If it trades above, so I'm looking for it to go above 80. So it must be at like 1981. 1981, 1982. Come on. 78. 79. All right. And we got price taking out this low. Pay attention to these candle lows, right? We see price taking out. Let's see, we got about 2 minutes left in this. Let's see how it closes out. So we might be looking for a sweep of that low there. That could be the sweep that I was looking for right here. This low right here. So we did get a little sweep. You can see there the candle came back down a little lower than there. We had a little liquidity sweep right here. Let's go mark it off as liquidity sweep. There we go. All right. And after a sweep, we normally see a rally. Right? Because we have the market moves in three phases: accumulation, manipulation, and then distribution. And manipulation is normally a sweep of a higher low when it creates a range. So you have a range, then you have a sweep, and then you have the run. All right. So every time the market sweeps a low, right? Now, is it chasing after this low right here? Let's see here. Ooh, this is the low. Ooh, traders, I'm gonna move the stop a little further. I know I'm gonna move my stop to the original place because I just realized that this could be the low that it's looking to sweep here, not that one. Oh, and it did. And the reason why I see this low right here, sorry, I just realized that now. My bad. And the reason why I'm looking at that low is because notice that this is the high. Then we had the low. What's the midpoint? What is the middle point? This one right here. That's the sweep that the market was looking for. So traders, this is where the liquidity was sitting right here. And at one point I had my stop at the wrong place. And when I just before the last minute, I realized, oh, wait a minute, I got my stop at the wrong place. There it is. That's the sweep. All right. Okay, good. We get a nice expansion. We've got about 4 seconds left. This is what I'm be looking for. All right. Is a sweep of the low and then the distribution move. All right, now we're in some money right here. Now we're going to get a break of that structure. And like I said to you, traders, you got to wait for that sweep. If you get the sweep, you get the run. All right. Now, if this candle closes out, now I'm up over $2,000. Remember, I closed out with what did we close out? 3,000 right here. We closed out with 1,300 before. Now, this is where you can make a decision, right? So you can go ahead and decide right here and say, you know what? Let's go ahead and take some profit off the table, right? Take some profit off the table. Let the rest ride. Now we've got a minute and 15 seconds left. Notice this area. Go to the 4-hour time frame. This is this previous low right here. That could very much be an area where we should be looking to take profit. All right. So going back to the 2-minute right here, as price. All right. So we've got price pushing higher. And now traders, here's your decision making. All right. Move your stop to break even here. Or put yourself in a little bit of profit. Now we got a solid trade. If this thing doesn't work out, then so be it. All right. So you can make a decision. Do you take your profit, close out with $1,500 to $2,000 in profit? Currently right now, we're probably going to close out with our scalp trade, probably about $1,600. But if you wanted to go ahead and add more to it for the day, here it is. All right, there it is. Now, traders, if you look at what we were doing this morning, can you see how making anywhere between $2,000 to $4,000 per day is something that you can achieve? All right. All right, so we closed out with a break of structure right here. We closed out above that area. We moved our stop to break even now. Now we're going to just let this thing run. Now, remember, this is a resistance here. So traders, we could go ahead and say, let's take some profit off the table here at this area. Let's take off 10 contracts there. All right. So if price gets to this point, we're going to take 10 contracts. Now, we could also go ahead and start moving up another profit. Let's see here. So we're going to take about $1,500 off, maybe about $1,600 off at this point. Notice how that area becomes strong resistance here. Now we've got about 49 seconds left, traders. I'm not going to live and die by the candle. I'm not going to live and die by the candle. I still want to see if the market's going to trade above that area. But if it shows this type of indecision here, then maybe it's just time to go ahead and cash out. I'd like to see the market expand past this area, but after that, I'm taking 10 contracts off the table. I've got about 22 seconds left. I don't like the way this candle is closing up, but let's see. I'd like to see another break of that high. We've got about 10 seconds left, traders. And what I'm going to do here is I'm going to take partial. Let's take 10 contracts. Let's take 15 contracts off the table here. So taking partial over here, 15 contracts off the table because we may get the market to pull back a little bit. So taking 15 off the table. Now we're going to close out that position right here, cancel that order. And now, traders, our stop loss is still over here, protecting that position. If it doesn't work out, it doesn't work out. But we took about $1,500 off that. Our scalp trade another 15. That's $3,000 we've banked already. And now we've got to stop at break even. And if this rides all the way up to the top, we'll make another $2,000. If it doesn't work out, no shame. All right, we're out. Okay, now, Tracy's takes nerves of steel to scalp once I make a trade. I don't look at it for a while. Yeah, it does. But you know what? You know what really helps scalpers and traders to be able to scalp the market is structure. You got to have structure. You got to know exactly what to do and how to do it. Because if you don't have structure, then you will be nervous. Because the only thing that puts nerves inside a trader and fear in a trader is the fact that they're not comfortable with the way they're trading. They're not comfortable with the strategy they're trading. All right, traders, let's go shift the gears. We're going to let this one ride. Let's go shift some gears here. And let's move to some currencies. Now, I want to go ahead and show you something here. Here is a trading system we've created called Smart Trader. It's called the Smart Entry AI bot. Now, if you take any currency pair, all right, let's take let's look at pound US dollar as an example here. So if I go to pound US dollar right here and I pull up my system here, My system says to me that we have a bearish trend. See on the top right here? This tells me I've got a bearish trend. It also tells me that my bias is bearish too. So I've got a bearish bias, a bearish trend. Now, if I've got a bearish bias, bearish trend, let's break this down on the chart. All right, let's go to the 4-hour chart and let's go to the pound US dollar right here. Okay, here's the pound US dollar. Now, with the pound US dollar right here, what do we see here on the pound US dollar? We see price inside accumulation. That's just what we see in this area. Now, what's important here, traders, is that we look at the bigger picture. So now I'm going to go to the daily time frame. If I look at the daily time frame, notice how the market is trading inside this candle. Notice how it trades off this area. And if it trades off this area, then we might see the market want to go ahead and push north. But while it's in this area, it's bearish, right? Because this last candle created a bearish bias. But now, traders, this is where you can go ahead and make decisions on. All right. You can trade with inside this candle. I mean, you can go ahead and as soon as the market pulls back up, sell for it to go back down south, right? Because the bearish is bias. Or the bias is bearish, sorry. But now if I go to my 30-minute time frame, now you can see here as I go to the 30-minute time frame, I've got the range marked off here. So traders, I'm looking at my trend. My trend says I'm bearish, right? The trend is bearish. Now what I'm looking for is reason to want to sell. Now, if I'm scalping or even swing trading, I want to look for reason to sell. And so I'm going to look for reason to want to look to sell. If I find no reason to sell, I simply stand aside. Or I can allow my system to automatically trade for me. It's placed on automation. Now, traders, we actually got a replicator set up on this where you can actually connect your trading account to the replicator, and it trades automatically for you. You don't have to do a single thing. What it looks for is it looks for biases in the market, looks for trend in the market, and then it goes ahead and looks for lower time frame bias and trades based on all of them lining up with each other. Now, if you've ever followed any of our signals before in the past and you've had one problem, and your problem was always being, big dog, why do we trade against the trend? Or why do we enter so many positions? All right, then this is going to be perfect for you, because what this does is it gives us a limitation. It tells us that we're only going to enter into 5 positions. Boom. So you know exactly how many entries. It's also going to tell you that not only are we only entering into 5 positions, but each position is going to be managed at 0.1% risk. Right? Here it is, 0.1% risk. So you have 0.1% risk per trade. Your total risk, you can see here, the total risk is going to be about 0.5%. So 0.5% is the total risk. So this is how it works. If you're following the system, we're following 23 currency pairs. You can select how many currency pairs you want to follow. These are the 23 currency pairs that we're going to follow. We've also included ETH and gold. All right, we're still working out the risk management based on that. But basically what it boils down to is that you make a decision. You decide on how you want your risk to be calculated. So if we're risking 0.5% on a trade, and you say, well, big dog, I don't want to risk that much. I only want to risk half of that. Then all you got to do is follow the same parameters, but use 50% of the master account. So which means that you're only risking 0.25. We'll help you set that all up. But you have control now of how much risk you're willing to take on each trade. And there is no long holds. There is no 20, 15 positions. There's only max 5 positions, max 0.5% risk, or whatever you set the risk to be. All right. And you don't have to have a VPS. You don't have to have a chart. You don't have to understand the market. All you have to do is set your risk and let it ride. Connect to the replicator, set the risk, and let it ride. All right. And traders, what we do every single day is we review the markets. We take a look at the markets. We understand what price is doing. And If it gets to a point where the market's not really showing that it's doing what it's supposed to be doing, we can actually make an early cut. So we can actually take a loss instead of losing 0.5% on a trade. We can actually go ahead and say, you know what, I'm going to lose 0.1% on that trade, or I'm going to on total trade, or I'm going to take a loss of 0.01, whatever that is. We can make a decision on that pretty early, all right, by analyzing the market. Let's go take a look at another setup right here. Let's take a pair as an example here. Aussie Canadian dollar. This is a great example here. All right. If I go to the daily time frame, firstly, number one, traders, what is my bias? My bias currently right now is bearish. And what's important right now is that we break through the structure right here. I want to see a break of structure. I want to see the market close at the end of the day today below this level, because if it doesn't, there's a possibility price may rise up. All right. But also, if I break below that low, my bias is then telling me that we have a continuation, which means momentum's now in our favor. All right. Now, I don't have to question it. I've got the indicator that's going to help me with everything. If I go to the indicator, you can see that we are currently selling. We've been selling a couple of these positions so far. But look at the Aussie CAD right here. What is the bias? It's bearish. What is the direction? It's bearish. Why am I selling? Because the bias is bearish and the direction is bearish. If that changes, we do have trading stop losses, right? So you can see here, all of our entry points have stop losses. And if the market gets to those areas, this is my sort of like the line in the sand. I can make an early decision to say, hey, I'm going to cut my positions early. But I'm also saying that if worst case scenario, I don't make that decision and allow the market to move and do what it needs to do, and again ends up going to my stop loss, I have a max drawdown. So I'm limiting the risk of my trade. So again, if you've ever followed us in the past and you've always thought, big dog, I really don't like entering so many positions. I like to minimize my positions. I like to minimize my risk on each trade. I don't like to hold on to long-term positions and pay the swap cost and all that good stuff. Then yes, this is going to be exactly what you were hoping it to be. All right. Now, traders, let's go to another pair. And let's take a look at another currency pair. Let's take an example. Let's go to gold as an example. Oh, by the way, let's go take a look at that ETH trade. What happened to that ETH trade so far? Let's see here. The price moved down eventually. Looks like it did. Let's go to the... Oh, okay. So it looks like, look at that. All right. So we ended up moving our stop to break even. If we kept our stop exactly where it was, price is broken through, finally broken through right here. So the market did go ahead and pull back, moved me out, took me out of stop. So we closed out with about just over $3,000 on the trade. And now we're looking for price to move back up to this area. So it looks like it's now going to start and break north. All right. But let's go to gold for a minute here. Let's take a look at gold. And let's go to our our daily time frame. So traders, if you're looking to trade gold and you're trying to figure out where a good place is to trade gold, then here is a great example here of what you can look for right here. So here, let's firstly, number one, identify what the bias is for gold right now. So did you notice that here we had a nice little good bullish bias here, all right? Price kept on breaking new highs, but then we had this candle. And after the market closed out with this big bearish move right here, the bias now went bearish. All right, so we have a bearish bias. Now, some of you might look at this and go, yeah, but big dog, don't we have a bullish trend? Right? Don't we have a bullish trend that's currently holding? Well, the overall trend might be bullish, but the internal bias is now bearish, right? So what I'm going to do is this. I've got my bias. Now I'm going to move down to my 30-minute time frame. Actually, I'm going to go to my 4-hour first. On my 4-hour, I want to look to see if the market is going to bounce off this this low here and pull back. Where is it going to pull back? So gold, we can recognize that gold has an area here. right? Here is what we call insufficiency sitting right here. All right, I'm going to mark this off as my 4-hour insufficiency here. There it is. All right, let's go 4-hour insufficiency. Now, I'm also noticing that we had the market take out this low right here. So we had a liquidity sweep, or we had a what we call a change of character right here, internal. And so now we could see the market wanting to go to liquidity first, take out liquidity, and then turn around and heading south. So I'll be expecting gold to maybe go ahead and push up here, reach this area, and then turn around and head back down south towards this low. So there could be a short-term rally. Now, because I'm looking at this structure, then I would have to wait for price to move to this area. Now, if I go to my 30-minute time frame, I can see that the trend is down. If I only want to trade in the direction of the trend, I should not be looking for buy opportunities right now. All right. If I'm a scalper and I'm saying trade it against, okay with that as long as it's tight, then what I'll be looking for here is the market to create some sort of pattern. All right. So here we go. We got the market creating high, low, and then high. And now we're at higher, low right. Now we see the market break through this area. Okay. If it breaks through this area and closes up there, what I'm going to be looking for is some sort of insufficiency. So right here would be my first level right here. All right. So I will mark this off as my insufficiency. And so I would want to see the market come back down, tap into this area, and then in this area, if things still look positively bullish on the larger time frames, I would go ahead and look to buy. So this would be where I'd look to want to enter the market. But traders, this is where you have to be patient. You have to wait for it to happen, wait for it to set up. Now you could do that, or you can simply go ahead and move to our indicator and trade and use full automation. Or if you don't want to be hands-on and you'd rather want to go ahead and connect to our trade replicator, you can do that. It'll do the exact same thing. It'll follow exactly this setup. So now if we take a look at gold, what is the bias? Bias is bearish. We knew that, right? We knew that right off the bat by doing our analysis. What is the trend? Bearish. We knew that too, right? When we went to the chart, we knew that. But just looking at this system tells you that right off the bat, right? You don't have to look at that. It tells you exactly what it's doing, all right? And then all you have to do is make a decision. Do you want to trade against the trend? Do you want to trade against the buyers? And this is critical right here, because traders, I know a lot of traders are always like, big dog, why are you trading against the trend? Well, you can if you choose to, but you have to understand that you are trading against the trend. Know where you are inside the market environment, because if you know that, then this becomes easy for you to trade. All right. All right, traders. Now, I want to go and thank our sponsors. This video has been sponsored by our by ACAP broker, and I want you to guys just give me a moment here. Check this out. All right, guys. Well, that is ACAP. They are our sponsor for this video. I want to go ahead and thank them for, firstly, number one. Number two, I also want to say that if you're looking for a broker, if you don't have a broker, check out ACAP. Now, this is the caveat here. This is the bonus right here. If you open up a trading account with ACAP with $10,000 or more, in fact, if you open up an account with anything, we'll be able to give you free access to our service. In fact, if you open up with $10,000 or more, we can give you a year access to our products. You don't pay a cent. You get everything. You get our live sessions. You get our EAs. You get our automation for trading futures. You get everything, the indicator, the whole shebang for $0 just by opening up a trading account of $10,000 with ACAP. All right. If you want to know more, go to our website. If you go to our website, you'll see at the bottom of our website on the home page, here it is. Here's a website. Go to the bottom of a page. You'll see here is ACAP. All right. There is ACAP. If you're looking for funded capital, here is DNA funded as well. And if you use our code, you can get 20% off. In fact, I'm going to give you a little secret. Use TNC25 and we'll get you 25% discount. All right. TNC25 will give you 25% off if you're looking for funded capital. Now, if you're looking to set up a funded capital and you want it to trade one of our systems, automatically we can help you set it up. So you don't have to do any trading, but check it out. It's on our website, on our homepage. Check it out. Now, if you want to join our live sessions, all right, and you want to get access and you want to do a free trial, you don't want to open up a live trading account with ACAP. I get it. You want to use your own broker, but you want to access our products. Check out the top there. You'll see there, here at the top, you'll see it says they take a ride. And if you click onto that, if you take your phone, scan the QR code, you'll get a link that you can go ahead and access all our products at $97. And that, my friends, will give you an onboarding call with our guys. We'll go through everything, set you up, help you with everything, get access to a private Discord channel, all of that stuff right there. Now, I did promise that I would be giving out free DNA funded trading accounts. So traders, for the first 5 people that sign up today, it's only today. If you sign up today, whether you open up a trading account with ACAP with $10,000, or if you go ahead and actually sign up with the QR code and sign up with a product today, all right, I will give those people, I will give the first 5 people, will give them a free $50,000 funded account. All right, you'll be notified as soon as you sign up. You'll be notified. So don't wait. Go sign up. Get access to it. It's all available to you. All right. All right, traders. Gold is starting to take off right here. Let's go take a look at ETH, traders. ETH is starting to make its move. All right. And if you look at NQ, NQ did the same thing. All right. There's NQ pushing right through there. If you look at NQ, what is our target for the day? All right. Look at the trade. Here it is here. Now, I want to remind you, traders, the system does everything for you. You don't have to try to figure out where the entry point is, where's the stop loss, where's the take profit. The system will automatically tell you where to enter the trade, whether you're using the system just to manually trade or if you're going to use this for automation as well. It's telling you exactly where to trade. And by the way, if you want to get access to this, go to, here we go. Go to Apex Trader funding account. All right. Go to this. Use our QR code, FxBigDog. All right. Use our code, FxBigDog, and you will get access, all right, to 80% off. Right. So this is not going to be $300. You're going to be paying only 80% of the cost. In fact, I think it's about 85% of the cost. So, and you can get up to $150,000 for less than $60. All right, but get it quickly before that coupon has expired. Traders, I want to go ahead and thank everyone for being here today. Appreciate everyone being here today. Thank you for all the questions that have come up here, and I hope to see some of you in the live trading session. All right. So with that being said, traders, have a fantastic afternoon. Have a fantastic weekend, and we'll see you next time.